Folks, today I want to talk to you about the RSI oscillator. Now, don't confuse the RSI oscillator with relative strength. The RSI indicator is the relative strength index, where relative strength is just looking at two assets together. So there's a big difference between the two, okay? Today, we're not looking at competing or comparing two assets against each other. Today, we're looking at actually the RSI oscillator. The RSI oscillator, relative strength index, and I don't say relative strength index, obviously, I just say the word RSI. But the RSI index is one of my favorite momentum oscillators. And I'm going to show you some examples. I'm going to show you why I like it, what's so special about it, why it's a great indicator to have in your trading toolbox, and I'll show you some of the coolest ways that you can use it. So, this is an example. What we're looking at right now is a chart of Nvidia. I'm almost definite that most of you have heard of Nvidia. It was one of the wildest stocks of 2018 and partly 2019. The stock was one of the greatest. They make hardware for computers. They make graphic cards, and they are on a tear right now, and I mean on a tear. So the RSI oscillator, and I'm using bar charts right now. You can use any technical analysis program. The RSI oscillator is on every technical analysis program. You would just go to study, you would put it on, and the only thing I do is the standard value on the overbought level is 70 and oversold level is 30. The only thing I change is I change the 14-day period to 10 days. I've done back tests. And for commodities, for currencies, 14 days tends to work well. But for stocks, I like 10 days. And ETFs. So anything relating to the stock market, anything relating to my style of trading, I prefer to use 10 days. So you put the oscillator on, and then right away, you would see something like this. Let me just reduce this in size to give us a little better understanding. So you would get two lines. The first line above would be at the 70 level, and the line here would be at the 30 level. When price action goes above 70, like it did right here, that means price level is overbought, the market is overbought. It's generated too much momentum in too little time. Momentum is rising too quickly. And there's a lagging indicator that follows price, but momentum actually leads. So what it does is it has a mathematical equation, which I will not repeat here because it's kind of complicated and it won't really help you do anything. But what you need to understand is it measures the velocity of the movement in comparison to how quick that movement moves in terms of trading range. Again, the most important thing you should be, in case your head is spinning, the only thing you really need to know is when we get a little bump here above 70, that means price is short-term overbought. What is short-term? Usually, this type of indicator works really well for swing trading. Swing trading means trades lasting anywhere from 2 weeks to a month, week to a month, but typically anywhere from a week to 6 weeks. Anything over 6 weeks is a hold. It's not a swing trade. So if you look here around May 27th, right here when we bottomed out, it tends to coincide with the market bottoming out in the short term. Does that mean it's a long-term bottom? No. These are rubber bands. It's measuring the velocity and the pressure of that rubber band spreading apart and snapping back, spreading apart and snapping back. So again, May 27th, notice here we hit a bottom. RSI went to 14. Anything below 30 means we're not overbought, oversold. So we went as low as 14. Again, over here we went to RSI was at, let's see here, we were at 79. Anything above 70 is overbought. And again, one thing and there's a lot of momentum oscillators. There's the stochastics, there's the MACD. I really, really, really like the RSI, and I'll tell you why. It's the least sensitive oscillator. A lot of these indicators, you blow at it and it'll move overbought or oversold. They react too quickly. The RSI does not. And that's what I really love about the RSI. It takes a lot of pressure, a lot of strength to get it to move. And that avoids, or not avoids, it avoids as many false overbought levels. So overbought or oversold levels. So again, it's not something that can move easily, and it takes a lot of movement to see that RSI move the needle. It's not, you won't just see it move after a day or two. You need to see some sustained buying or selling pressure. And again, as you can see over here, the RSI signaling overbought territory and the market cooled off. Now, you may be asking yourself, well, how effective is this? I'll be very honest with you. It's less effective for telling us when markets are going to turn, and a lot more effective for telling us when stocks or ETFs are going to stop moving. So it may not tell you that, hey, we're at 100 and we're going to move down now, but it'll be really effective for telling you we're at 100 and we may congest or just go nowhere for a while. So it's not really a reversal indicator. It's an indicator to tell you when we're running out of momentum. And it's the least sensitive one. Now, what's the best way to use the RSI oscillator? Well, one way to use it is, as I mentioned, when you see something overbought, that means it's probably not going to go up much. Or if you see something oversold, which we haven't had an oversold signal in the SPY. I'm looking at the SPY, the S&P 500 right now. In a while, we've been overbought quite a bit. As a matter of fact, a good portion of the last 2 months, we've been overbought. But a really, really, really good way to use the RSI is to use what I call divergence analysis. And divergence analysis is simple. You look for the price action, as in case here, the RSI, the S&P 500, is clearly making higher highs. I drew this arrow, this little line here to show you, that the highs are in fact getting higher, and you don't really need that. You could see it. But notice the RSI. This level of momentum can't sustain this price action, and that's causing, it's still overbought. There's no question it's overbought. But what it's doing is it's diverging. Notice the highs are getting lower and the highs are getting higher, but the RSI can't sustain the momentum levels, so it's not moving higher. And when you see that, that's telling us that the market, the S&P right now is not just overbought. It's not just stretched out. It's also diverging, which means that the RSI oscillator cannot generate enough momentum to even take price action to really strong overbought levels. And that's dangerous. And I already mentioned to you, the RSI doesn't generate overbought and oversold signals very much, very infrequently. And yes, we've been overbought for the last few months, but when you see divergence, that's more. That's telling you that the indicator itself cannot sustain the level of momentum that price action is sustaining. And that's very, very powerful. And that happens so infrequently that I need you to be aware of it. So I want you to understand what the RSI oscillator is. It's an oscillator that measures momentum. It's not a lagging indicator like the moving average. It's a leading indicator because it's measuring momentum and what price action is interpreting that momentum to be in real time. Very important. When you have a lagging indicator, you're kind of seeing what already happened. The indicator is representing what already happened. Moving average, for example, when we're looking at this line here, it's lagging behind price action. And it's really a great indicator to give us a barometer of the overall circumstance, of the overall situation, of whether or not we're trading above or below, of whether the stock market is strong or weak. But if you're looking to time your entries, or you're looking to time specific short-term price action moves, there's really nothing better than divergence analysis. And right now, and this is why I'm explaining the RSI indicator to you right now, the RSI oscillator right now is diverging, and it's been diverging now for a few weeks. Not only that, momentum levels in the NASDAQ 100, and those NASDAQ 100 stocks are all in the S&P 500, they are huge and they are overbought. Momentum, actually, we had 90%, we had 91% of stocks in the NASDAQ 100 trading above the 50-day moving average. Right now, we have about 10 to 12% less stocks in the NASDAQ 100. But price action still moved up. So you got narrowing of momentum, you've got divergence, you've got overbought territory. What does this all translate to? It translates to the fact that the market's overbought, that rubber band needs to contract, and we can expect volatility, and congestion for the foreseeable future. And if you're an income trader, that's the best news that you've probably heard in the last few weeks. Sideways market with congested trading action. Folks, you all know my favorite oscillator, my favorite indicator. It's the RSI indicator, the Relative Strength Index. And right now, it's signaling that massive gains that we've seen over the last year, they're not likely to continue. I personally believe that we're headed for an extended period of consolidation before the market makes another move. But that's not a bad thing, you see. There's a lot, and I mean a lot of money to be made if you use the right strategy. And that's why Rob Booker's timing couldn't be any better. I mean, he got the timing down perfectly. You see, he put together a video, and this video will show you how to execute an income strategy that is perfect. I mean, tailor-made for the current market environment. But here's the thing. Today's the last day the video will be up. In it, he explains how the strategy works, and he gives away his favorite trade. Click the link below. Get in on it now. Watch it before it gets taken down. Talk soon.